Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of August the 27th, 2018. Now, to get started this week, we're going to begin where we always do with the all-important US dollar index. Now, we can see the dollar has found some support closing out very close to the week's lower part of the range. We're coming in right around the 94.83. We've closed out at 95.05. Now, we can assess here with our fresh triple EMA cross, there is downward pressure on the dollar, but we've basically stalling out right around this 94.85 area. So we're watching the additional indicators from VantagePoint very, very closely to see if we can get a signal as to its next move. Now, the dollar in most cases strengthens at the end of the month or the first week of the new month. So we're still very much within the overall range between 93.30 and just about the 97 mark. So right now we're sitting at about the halfway mark, but the key level to watch next week will be 95.47 and 95.47.9, which is basically the VantagePoint medium and long-term pivot areas. So as long as we're holding below that area, the dollar will extend its losses. But at this particular time, my optimism on that remains heavily guarded. When we look at our individual crossovers, we can see our short term is down, our medium term is down, and our long term is down. But again, we must break through this support level in order for the dollar to extend. So we'll be watching the neural index very, very closely, and of course the predicted RSI. We've had one failure, as you can see. That failure is coming in at or about the 47 level, so we've come up to the 50 level, kissed it, and backed away from it. So it tells me we've probably still have a few more, at least a few more days of dollar weakness. Now, when we compare that in relative terms to gold, we can see the direct intermarket correlation that I talked about in last week's weekly outlook, that gold is likely to extend higher. Now, in thin illiquid Friday trade, we've pushed above the key vantage point level, the former resistance, 1207. We're closing 1213. So that's a good sign for gold. But once again here, guys, be very, very cautious in the first week of the new month, because in most cases, institutional flows dominate and most money is moving in, not out of the US dollar. Now, again, I think some of the comments from the Fed last week, inflation is rather tame, so we're going to get a rate hike in September, guys. We know this, but maybe one more this year. But then the Fed is talking about normalization, which basically, in layman's terms, means no more hikes. So we'll keep an eye on that right now, but that's definitely cooling the dollar off. Now, with those comments from the Fed, it's also pushed equities higher. No interest rates means equities are going higher. So VantagePoint has made a very, very interesting call. I've talked about this one in the live training room several times this week, that basically as long as we're holding above 28.46 and 28.58, then the S&P is likely to extend higher. Now, somebody did mention to me this week and said, okay, well, it looks like a really easy short setup here on the S&P 500. And I didn't disagree with that, but what I did say was that I'm not willing to short until I get a signal from VantagePoint to do so. We've got our medium term crossing our long-term predicted difference here. Even though we're at these lofty levels, VantagePoint is saying that potentially we're still going higher. Now, the downside, what I've warned everybody about this for basically the entire calendar year, is that any time we have come up to these levels, we have had a significant sell-off. So be very, very cautious over the next few weeks of a bull trap setting up here. And what I mean by a bull trap is that we make an all-time high, and we make a new yearly high, and then we plummet. So be very, very cautious with this one this week. Now, with oil is still extending higher. That's keeping, it helps strengthening the Aussie, the New Zealand, and the CAD, and even the British pound to some extent. These are the intermarket correlations we want to watch. So right now we're extending higher on oil, but we are coming in to a verified resistance zone. Now, what I mean by verified is we have a swing high up here at 73.33. We've moved lower. We've come back up, but we have not made a new high, and we have stalled out at 69.36. So we're in a very significant resistance zone between these two levels here, so be cautious next week. But as long as we're holding above 66.82, oil appears to be poised to move higher. But again, we're at 83.6 on the predicted RSI, so we're getting a little bit overbought here. So be very, very cautious with oil around 69.50. Now, as we move into our main Forex pairs, guys, the first and foremost one we want to always make sure we're monitoring very, very closely is, of course, Euro US. Now, with Euro US, we've recovered off this low point here that I talked about in last week's Forex Weekly Outlook. The VantagePoint indicators were warning that we were going higher. We've had a nice move from last week from the 113 area all the way up to where we are. But once again, guys, we have several verified resistance zones here. The first one coming in at, again, the 115 level. After we broke through 115, now we're getting all tangled up on the next swing high. That's coming in around 116.29. So be careful of that, because then we have even further resistance all the way up towards 118, 119. So this is a very heavy resistance zone. So I'll be watching the VantagePoint indicators very closely to see if we are getting any kind of sell signal. But again, I would anticipate the euro to continue to make gains while above 115.29. If we lose 115.29, institutional flows will take hold and Euro US will plummet. I would look for a move lower on Euro US probably Wednesday or Thursday of this coming week. Now, with US Swiss franc, we've got this significant resistance zone at 99.80 that I've talked about repeatedly over the last few weeks, but we're now heading into a very well-defined range bottom here. That's coming in at 97.90. As you can see, the market, as it gets even close to that range bottom, we start to see buyers creeping in here. So we've got a double bottom forming at or about, we're going to check this here, right at about the 98.07. Longs carry a slight edge while above 98.07 and this additional range bottom, which is coming in at 97.90. So only a sustained break of that level would then take the pressure off the downside. So if we can hold these, or the upside, excuse me, because most buyers are looking, swing traders, order flow traders, they're all looking to come in at this verified support zone. So keep an eye on that area very closely. The VantagePoint indicators a little bit mixed here, but they're still saying we've got a little bit more downside before we turn higher. Now, with the British pound, Brexit obviously is still a very big issue here. We can see a very, very well-defined resistance zone on the British pound US dollar. That's coming in at 129.24. But more importantly, we have the critical VantagePoint pivot area, 128.67. We're closing the week below that at 128.42. But our predicted differences are rising here. So it looks like we have a shot of breaking through this resistance. Just be careful here, guys. In order for us to get to our next target, which is going to be up in this 131, 132 area, we must make a nice clean break of 129.24. If we can't do that, then we move lower yet again. I would anticipate the pound dollar should see a little bit more upside action before those monthly institutional flows kick in. But remember too, we're also in the month of August, which is thin, illiquid markets. When we're looking at dollar yen for next week, basically the dollar yen is finding pretty strong support down here. That's coming in right around the 110 area. Even with my own direct clients, we've been buying this one this week. But a very well-defined, verified resistance zone. That first level is coming in right around the 112.15 area. We've still got significant resistance here at 111.48, but we did close 111.71, so that's relatively bullish. But the next big move on this pair will come via stocks. If the S&P 500 can break out to the upside, dollar yen will follow. But if it can't break out, then dollar yen is, and if the equities, the S&P 500 turns lower, then dollar yen will absolutely follow behind. So keep an eye on that. But right now, the indicators from VantagePoint are suggesting, we are going higher. Now, as we move into our main three commodity currencies, US CAD, not a bad week here. This resistance area that I identified last week at 131.80, significant resistance there. It's holding our VantagePoint critical long-term pivot area 130.68. It's holding also. So the problem here, guys, is that we're trying to break through this massive support zone between 129.60 and 129.40. That's the level. We've got to break through this on the downside. We need oil going higher. Oil and equities go higher, that's going to fuel the Canadian dollar rally, the Aussie, the New Zealand, the commodity currencies, they're all going to follow here. And if gold moves higher too, that's another one that's going to help out. But right now, we're a little bit mixed here. Our predicted differences are down, but our neural index is higher. So it is a very mixed bag here. But on the downside here, guys, if we look at our predicted RSI, once again, we are failing at the 50 level on the RSI. You can see how the VantagePoint predicted RSI came up, kissed the 50 level, and now is turning back down. So when we look at today, where we're sitting at the RSI to start next week, we're sitting at 39.1. That's suggesting we have more potential downside coming with this particular pair. So if US Canada can move lower here, then we've got a couple of other pairs that are going to follow higher. Aussie US and New Zealand US. Now Aussie US is very much reliant on the S&P 500 moving higher. One could trade the S&P, a good intermarket analysis trader here, guys, can trade the Aussie US without even looking at this chart. We just have to look at the stocks. Stocks are doing well, Aussie's doing well, New Zealand's doing well, the CAD's doing well. But the yen is not, and the Swiss franc is not. So it's kind of a double-ended sword here. But the key point that I'll make right now, 73.24. We're closing the week 73.19. We've been banging up against this level, so we really need these stocks to get moving. We do have a crossover in the predicted MACD. The predicted RSI 49.5. We're not quite there yet. We don't have a lot of upside momentum, but I believe it's coming. So it's all dependent on the S&P 500. Same thing is going to apply to New Zealand, guys. You can see the resistance building here right around the 67 mark, but more importantly, 66.70. We've closed above that, 66.81, that key VantagePoint pivot area, the T-cross long pivot area. These are big levels, guys. So we've got 66.63, 66.50, and 66.70. As long as we can hold above these levels, we have a shot at moving higher here. But again, these commodity currencies are a little shaky. But once again, VantagePoint has made a nice call here when we're looking at the shorter term indicators from VantagePoint. Predicted differences rising, the short-term crossover off an identifiable support area does not surprise the intermarket analysis trader that we move from 65 all the way up to 67. But again, we must break through this. And ultimately, guys, the next move on the Aussie US and the New Zealand US is going to be determined by the price of gold and by the price of equities. So with that said, this is the Forex Weekly Outlook for the week of August the 27th, 2018.